All right, good morning, everyone. Tony Laporta here with TonyLaporta.com. Before we start, I do want to make note that this is the month of November, and the month of November is Gratitude Month, which brings me to being extremely grateful for all my clients. You make me do my homework, and because I do my homework, I'm a better trader for it. I'm a better analyst for it. Also, in 8 days' time, I celebrate 18 years sobriety. And what sobriety has given me over these years, put it this way, I am living a life beyond my wildest dreams, and I want more. And I'm 65 years old now, so I'm hoping for 20 more, if not more than that. So, as my first sponsor always told me, I suffer from the disease of more is better. So let's get on with it. I put out those weekend thoughts in the Discord trade room about the trades I've had in the past and where I've had my money invested, where I've made my money the past 8 months. And obviously I've made very good money in the coffee rally, and I've made very good money on the corn rally. And I referred back to a couple of trades, back one in 1995 when I went long silver. And I was working on the Life Exchange at that time. That stands for London International Financial Futures Exchange. I was working on the Life Exchange at that time, and a friend of mine, an English mate, who worked on COMEX back in the 80s, and he walked up to me, he said, "Do you realize that the price of silver," and it was trading $3.50 an ounce at that time, "the price of silver, or the price of a Big Mac, a large fry, and a Coke is more expensive than the price of silver?" And I went, wow. And, and that's all, being an addict, that's all I needed was a reason. And I went and bought 10 silver that day. And it barely ever moved from 350, maybe 345, maybe 355. And I wasn't looking for much. I don't know why. My timing was impeccable. Within a week, I'm buying more at 360 and buying more at 370. And finally, when silver got up to, I don't know, let's say $4 an ounce, it got around the floor, I was a local trader, and it got around the floor that I had this silver position and that I was adding to it and all of that. And a dear friend of mine, a gentleman we all called Dicko, came up to me, and I was trading the German Bund in the pits at that time. And he came up to me and he said, "Do yourself a favor. Quit coming to work. Stay at home and monitor your silver position." Now, this is the mid-90s. There was no Globex. There was no, I had a pager, and the pager updated the cash silver market every minute. So that was it. Every minute I got an updated quote 24 hours a day. So I took his advice. And the reason he's told me to stay at home, he says, because what you're going to do is, and at that time, we were all throwing around the kind of numbers in the Bund pit where you'd make or lose 10 grand in a day. And he said, you're going to come in here, and one day you're going to have a bad day trading the Bund, and you're going to lose 10 grand, and you're going to look at your silver position, and you're going to see that you're up 10 grand there. And you're going to need that feel-good factor, and blah, 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 and you're going to do what you're not supposed to do. You're going to take some profits in silver when really you should be running that. So quit coming to work. So I did. I quit. For probably the next 9 weeks, I stayed at home and every minute on my pager. And the trade lasted 11 weeks. And I ended up selling 70 some contracts. I think it was 77 or 73 contracts at 473 an ounce. And that was a big trade. It was truly a big trade. And then and in that whole 11-week period, I never traded anything else. That was it, silver. And I only added the silver, when it would trade to a new high, and the next day if we had a correction, I'd add on a little bit more, another couple of lots, on a correction. So then let's fast forward to the same kind of trade I made in 2012, where I went short 3 Japanese yen at like 128.5. I know I put in like a 130.25 stop on them, and within 4.5 months, I was taking profits on 23 contracts at like 9,700, something like that. That was, again, another huge trade. And I used the lessons learned from the 1995 silver trade to monitor this yen trade. And the worst thing about the yen was I was short the yen, and the yen has always been sort of a flight to safety type product. And any day, when you went to bed at night, any day, you could wake up to being stopped out your stop run because someone got shot, someone got nuked. You just never knew. And but again, I took the risk. I never traded anything else. I traded that. So I fast forward to what I wrote about in my weekend thoughts about how I haven't traded. I haven't traded the S&Ps this year. I haven't traded the bonds this year. And probably by March, gold was such a nightmare. I quit trading gold. And only last week, or I think it was last week, I decided to activate my gold on my platform. And before you know it, I was long a total of 7 contracts. I originally bought 3 at 17.98, and I bought more around 85, and I was long 7 contracts around 17.90. And on the Fed day, I do believe, I sold them all at 67. And this was a trade. I'm still looking for new all-time highs here this year in the gold. I'm really looking for a move. And I basically took a $15,000 loss. And the point of it was, if I take the heat and run the trade, it's a $20,000 winner by Friday. And I went for my hike on Friday morning, and when I got back, the gold was another $10 higher. I did do some scalping, but now I'm sitting there looking at the whole thing, 15,000 down to 20,000 up, and I'm ready to make a revenge trade. And it's like, okay, enough. You haven't traded this stuff for 6 to 9 months. Called the clearinghouse. I said, take it off my platform. And I can do that with my clearinghouse. They literally take that. I can't trade the S&Ps unless I call them or email them. And because I'm an addict, I want to click the mouse. And so I can't do it. And I have so many reasons to not do it, because basically starting at the end of last year, even the third quarter of 2020, I started trading commodities, and the commodities have been very, very good to me. And so then finally at the beginning of the year, I said no more financials. I traded the bonds in the pits, and my favorite market. But after the central banks got involved, it didn't become a fun market anymore, and it's still not a fun market. I sat there calling, giving all my clients that head and shoulders, possible double-headed head and shoulders bottom formation in the bonds, and I never took it. And what they do on Friday, they just took off. And I think they're going a lot further. But at that point in the game, I'm frustrated with losing money in the gold and saying to myself, you know what? Revert back to what made you a ton of money in 1995. Revert back to what made you a ton of money in 2012. You don't need to trade, 10 different products to make money. You only really need to trade 1, or at this point, it's going to be 2. And it's going to be, I'm going to keep my money where I believe it's supposed to be done, in coffee and corn. I'm flat the coffee market at the moment. I'm long 250 Deck 22 calls that I started buying about 6 weeks ago, and I'm still long enough of the SEP 22 calls. I was long 200 of those, but on the spike in volatility last week in price, I scaled out of 160 of them. I still have 40 left, and I may just keep those as a lottery ticket. The point that I'm trying to make here is, I'm not going to trade wheat. I'm not going to trade the beans. I'm not going to trade, well, I do have a short log position on right now, and when I do get out of that, I'm going to massage it down. I think they're coming off, but I am going to concentrate my efforts moving forward in coffee and corn. And basically new crop, which will be the new crop corn, Deck 22. The articles that I've posted in the Discord room, about these fertilizer issues, they're only going to get worse. I've already got some a couple of my buddies, in Central Illinois telling me that, the USDA has come out with corn acres at like 92 or 93 million, and they're already saying that, that with the price of fertilizers being where they are, there's no way they're going to be planting as much corn as they originally thought. And they're already thinking in February, when the number gets reported, it's going to be ratcheted down to 88 million. And depending on what kind of winter we have, I mean, winter is starting early. It's starting early. They're already planning a big snowstorm here in the Midwest over the next 3 weeks. And, and it's going to be cold. Winter is starting early. And my ag guy that I follow, he's calling for a long winter. And he's been calling for this for a year. That starts the middle of November. And bloody hell, here it is. So I don't need to roll the dice and wonder with the S&Ps, and the RSI is 85 in the S&Ps, and trading that stuff is, the higher the market goes, the thinner the air gets, and the volatility is crazy. And and I've been calling the indice trade, crash helmet trading. You need to have a crash helmet on to trade it. I will continue making market calls. I will continue to look for higher prices in the bonds. I will continue to. This is the week where we kind of tend to look for the pit bull low. The Thursday, Friday before options expiration. So I will always share those thoughts. I will always share it's my job to have a view, and I have a view, and I have to have a view. But the indices are getting a little bit overdone, and this is the week when we tend to see a sell-off into Thursday, Friday. So I think that's what's going to happen this week. If I was trading the indices, would I be shorting it? Probably not. Only because, jumping in front of freight trains is not my recipe, to make money. Plus, if the bond market is going to be rallying, which I believe we're in the infancy of a decent rally here, what does that mean? That means interest rates, long-term bonds go up, long-term rates go down. Wall Street's always loved lower interest rates. And everything you read, in social media is like everyone wants to pick a top. So I'm staying away from there. I want to concentrate my finances and my brain cells, and I don't have too many left after 25 years of partying, even though I have recouped a few through the past 18 years of being clean and sober. But I do want to concentrate my efforts in the corn market, because I do believe, you can buy corn today. Where December corn closed at $5.40 and a quarter. You can buy December corn. I think you'll see $6 before you see $5. And if you're going to see $6, I think $7 is on the horizon. If the winter starts out like it's starting out already, cold, nat gas prices are going to go up. And if nat gas prices continue higher, that raises the cost of fertilizer even more, because they need nat gas to produce the whatever. It doesn't matter. And the farmers can't afford to the futures markets were made for farmers to hedge, their product for next year. Well, there's none of them going to be selling next year's crop at $5.40. They're just not going to hedge it now because of what their fertilizer costs will be. They can't make any money at $5.40. They may start hedging at $6.40 or $7.40, but they're not going to do it at $5.40. So that's where I want to keep my efforts. There's obviously a WASDA report coming out on Tuesday. I'm hoping, and hoping's not trading, hoping is hoping, but I'm hoping for them to lower yields again, or lower the acreage. which they put up with the last WASA report, which broke the market, the perfect buying opportunity actually. And if you look, you look at Deck 22 corn is only about, I don't know, 15 cents away from its all-time high for the move for that contract, but the beans sold off again, and the play out there, what people are thinking is, if these fertilizer prices continue to go up, they're going to have to plant more beans and less corn next year. So there's every reason for me to be in this corn market from the long side, and there's every reason for me to be in the coffee market. If you go through all those, everything I've posted, all the articles, all the work that my ag guy did with his boots on the ground tour of Brazil, all the work they've done, the coffee's going higher. And I just read an article recently how some coffee producer in Brazil has been waiting 3 months for his fertilizer. His fertilizer hasn't come. So that's going to, affect the total output for the 2022 crop. A lot of interesting stuff going on, but I made my good money in the past 8 months being in coffee and corn, and those are the markets I'm going to stay in, and that's the way you make money. I don't need to be in the gold market. I mean, I wanted to be. I wanted to have a position now and just run it, but now the market ran away from me. I left 30 some thousand. I lost 15 instead of making 20, and the first thing I want to do is get my $35,000 back. Like the market, a revenge trade. The market wants to give me my 35 grand back. No, I've been around here long enough to know revenge trading will only cost me money. Where have I done my best? What do I feel are the low risk trades out there? Corn and coffee. So that's about all I have. This is Tony Laporta with TonyLaporta.com signing off. If you're new to following me on Twitter or something like that, you can go to my website, and there's a $17 trial there, and just move forward with it. If you don't, more power to you. It's I make good money trading. It's to have a subscription base, which I have a very healthy subscription base. Always, as my sponsor said, more is better. So that's all I have. Cheers.